financial services. I mean, that was a sort of hot destination.
Hot.
We've had a lot of things happening.
Yes.
Regime change at the central bank.
Yes.
We've had 3 banks now go into receivership or whatever. What are you seeing? Is there still interest to come into that sector, or what are people thinking?
There's still interest because obviously financial inclusion is a critical part, and especially even on the fintech space, where there's been a lot of things that
a lot of work in there as
we've done some work in fintech in terms of acquisitions. Financial services is still hot. What has happened is that the multiples have now reduced, whereby banks could actually command a premium, especially in this market. We've seen that now it's coming. It's becoming more and more realistic because most investors are like, what if the book is not as good as I thought it is? I think it's brought in a bit of sanity into our banking sector.
An interesting point. So do you expect more activity around consolidation now?
Yeah, ideally there should be, but when you look at all our 43 banks, you think there are some where you're not too sure whether anybody would want to consolidate with them. So it's to wait and see what happens to those. So, because some of them just hold a license, that's it. So they don't have, if you look at the loan book, it's not attractive in terms, it's probably...
So you're probably just going for the license?
Yeah, just going for the license. So the question is, do you want, are you coming in to just get the license, or are you interested in looking at an acquisition or merger candidate that already has footprint, that has got a good brand in the market, and that's just looking for capital to take it to the next level? And as the central bank moves more towards a risk-based capital approach...
Is that what they're doing?
Yeah, that's what they're doing now. So it means, with the implementation of Basel 1, 2, now going into 3, it's about, if we look critically at your loan book, how much capital should you have? And now it's no longer, capital being dictated by the central bank, but by the business that you do on a day-to-day. The type of business you do on a day-to-day basis. And so the smart banks will be able to see, okay, we do need to raise a bit of capital if we want to go into this type of business, and that should then even out, what's happening in the market. I think they need to probably be a bit more conservative in terms of how they think about this market and what they want to do. But it's still an interesting space. And again, it's about innovation. So the bank that innovates and is able to provide the services, the solutions that Kenyans want.
And we've had a revolution, haven't we, really, in terms of the mobile phone and how people are interacting with the bank.
Yeah, precisely. It's no longer about me going into the banking hall to get served. If you look at the CBA M-Shwari partnership, CBA has customers they've never met.
No, that's right.
Yeah, they don't even know what they look like. All they know is their telephone number, and that's enough.
The world's changed.
It's really changed. We're in a virtual world now. So virtual banking, who would have thought? In those days of you had to go to the bank to physically do this, that, and the other, they're all gone.